Good morning, legends. How are we all? I was just preparing to go live a bit later on and was having a look at the charts and realized that I just really don't have anything to add other than what I was talking about yesterday. So I'm going to make this a super fast video. As we know, we have CPI tonight and we need to be ridiculously careful. So let's just talk about what's been happening so far and some levels of interest that kind of we need to keep an eye on. So number one, yesterday I talked about the PPI that was coming out. And in that video, I said I had a feeling they would use that news event as a stop hunt, which we can see here in the volatility of this red candle. That was right as the news came out. And so that basically ticked that box. However, the range that we also talked about, the 1 hour range, is still intact. So yesterday I talked about forming a box around when you see this consolidation, form a box around it from the candle closes and see where the wicks poke out either side. And if you can kind of get an idea of who they're trying to induce into positions in the wrong way. And so when we do that, we can see here that we've got wicks to the downside now. We've got more than we had yesterday, obviously, more price action. We've got wicks to the upside. Currently, we're in the dead gap zone. So right now, they're inducing anyone they can. So the holding price sideways, they're not letting it move anywhere. And for anyone who's guessing on super high leverage in this range, they're stopping them out on these super short wicks. So these aren't games I like to be part of. This is certainly for me, it's a sit out moment. I know a lot of people are getting frustrated because they want to be in trades, but this is the game. There are going to be weeks when there aren't trades and you just have to sit on your hands and you have to wait. But the way that I use this time, instead of using all my brain capacity on trying to force trades in a region like this, I keep my eyes on the prize, because the bigger move is not going to be trying to trade something in a range like this. The bigger move that you want to be part of is either the fake move into CPI, if you can live trade it, if it starts to move fast out of the zone, which is highly risky and you have to be on your game, which is why I'm saying save your brain capacitance, which I know is not a word, but it's a word to me and my daughter. So save your brain capacitance and then trade that, or trade the post news if you want something that, will show a clearer direction that you could probably potentially swing trade for a couple of days. That's what you want to be part of. You don't want to be part of this. Anyone looking for trades here, I don't understand it. I do understand it's a game of patience and most don't have it. So this is why we end up getting wrecked. So just be really, really careful in this zone. When you draw that box around the candle closes, you can clearly see the market makers are trying to trap us. So you have to be one step smarter and not give them your money. So with all of that in mind, here's another thing that I notice happens a lot, especially before a CPI news event, but usually before any really large kind of event. And that is, we start to see these really large buy orders come in fairly low below price. And that is basically people hoping that they catch a falling knife. So we can see here the kind of lowest level that we have is 18,500. We've also got another level here at 18,800 and another one at 18,900. Now these ones here, because they line up with the previous weeks, there's a potential that that will form the initial low of the day today, maybe. But ideally, what you want to be doing is keeping an eye on these numbers. And once the news comes out, you actually want to see if they remain there, because they could get pulled when the news does come out. Above price, the highest level is up here, which is at 19,250. When we have a look at the chart, we can see that that is this zone here, which is the final recovery of this vector candle right here, which has only wicked into once. It's currently wicking into now, but it doesn't have a full candle close. So if there's going to be any more upside on Bitcoin, it needs to be able to break above this level. Otherwise, if you continue getting wicks at this level, eventually what will happen is the 200 EMA will catch up to around that level. And if you keep getting sideways price action with another wick into there, you're going to end up having a fair few wicks in this zone under the 200 EMA. And it's actually an area to short, not an area to look for longs. So keep that in mind as well, because if we keep struggling at this area, then maybe we are coming down for an extension of the final 3 wave down and potentially coming into these areas down below here. Now, having a look at high block, our delta currently is only at 2 billion. This is danger zone trying to pick a trade. When the delta is close to zero, the market maker has to work hard to get people to commit to trades. And they do that by issuing all those stop hunts that we've seen. So I know that it's sound like a broken record, and I know that you're going to look for trades anyway, but it's a highly dangerous time to be looking for trades, and it's a perfect time to be practicing patience instead. As far as the liquidity that we have below price, we do have a couple of big peaks here. We've got 18.6, 18.5, and 18.3, which kind of lines up with those trading light orders that we've seen. I also want to have a look at the heat map. And so here we're just looking at the 12-hour commitment of trades, and we've got below price 18.8 is an area and 18.45. So those two levels are really giving us pretty good confluence across everything that we're looking at. Above price, we've got 19.25 as well. So, and then above that, 19.425. And this range here, we've also got 19.5. So there is a possibility that we do have a potential fake move to the upside pre-news. And if the news comes out not so great, a terrible move to the downside, it's also highly possible that we do the other way, in that we go down first, then we shoot to the upside. Now, I know that's not that helpful, because you're like, well, which way are we going to go? But we're in a range, and I'm not going to be that kind of trader that just says we're going to go this way when the price action isn't telling me that. Finally, would you say this is a W formation? Potentially. However, what I don't have is the second side of the W. It has not broken that 50 EMA with strength. And so therefore, that's why I feel that it's not necessarily a W, and we are just in an accumulation range. So until we break above here and are able to maintain above here, I won't really consider more upside. So for me, I personally don't want to be part of this, but I think the bigger opportunity is going to come post CPI tonight, and I'll never put trade ideas out there if I don't believe you should be trading. So those are my thoughts. Hopefully you can find something else to do today and enjoy the CPI news event.